New this morning, I want to tell you about some news. Stripe now announcing a tender offer for employees and shareholders. It now values the company at $91 billion, $91.5 billion exactly, bringing the company closer to its all-time high of a private valuation of $95 billion back in 2021. In an annual letter that's out just now, the co-founders and brothers, Patrick and John Collison, announcing that Stripe generated $1.4 trillion in total payment volume 2024. That's up 38% from the year prior. It's equivalent to 1.3% of global GDP. In a rare and exclusive interview, I spoke with co-founder and President John Collison about the factors driving the company's increase in all that payment volume.
What caused it to be so strong in 2024 was basically the combination of the businesses that were already on Stripe grew quite well. And, we talked about the AI ecosystem in the letter, where all of the, OpenAI and Anthropic and Cursor and Perplexity and all the companies that rightly are getting a lot of focus right now because of what they're doing, they're all running on Stripe. But also then what we saw is many of the world's leading kind of scaled, established businesses, everyone from Hertz to Amazon to Comcast to Pepsi to Hershey's, started moving their business to Stripe. And so I think the confluence of those dynamics meant that 2024 was a particularly good year. But it's lumpy, and you cannot manage the Stripe business on like a super tight quarterly EPS basis because this growth tends to come in waves.
You've announced that Stripe was had profitable last year, on track for profitability this year. It took 14 years to accomplish this. Is it straight up from here? Do you see yourself making additional investments or other things that you think, year on year, here and there, could actually mean that it's not profitable?
Look, we love investing in new areas of the business, and we described a few of them. Crypto is a particular area of investment. We made a large acquisition in the stablecoin space that just closed in January. We also have Stripe Billing, which is our new software business, now at $500 million. But I would still expect that, even with those investments, we would expect Stripe to be profitable on an ongoing basis from here.
In your annual letter, John, you were very bullish on stablecoins. And I know you've been playing around with crypto for a very long time, but what is it about now, and what do you see as the opportunity?
We see stablecoins as finally delivering a lot of real-world utility, and in particular with businesses who, who we sell to. People talk a lot about the consumer and the retail side of things, but if you look at what businesses are doing, we see a lot of uptake, people coming to Bridge for corporate treasury management, for international remittances. They want to give people access to dollar accounts overseas and things like that. The chains, the underlying chains, the L2s, are also, they've gotten much more performant over the past 5 or 10 years. And so I feel like there's a moment now where that real world utility amongst crypto followers, not just crypto people, but just people who want to get something done, is starting to happen, which is why we're obviously paying a lot of attention.
AI, huge watchword, huge piece of your business. How's it transforming what you're doing?
Yeah, look, what I think is interesting about AI is that unlike maybe previous booms that were more of a speculative nature, where you had just kind of asset price speculation, here we're seeing an AI boom that's very real. There's a bunch of companies that have grown and grown and grown over the past few years, but they've grown because they have real revenue, and they have real revenue because there are customers who find the products really, really useful. And so it's very substantive in that way. And we talked about some of the dynamics that we see. We talked about folks like Cursor, who are very impressive and reached 100 million in annual revenue in just completely record time. We're certainly seeing that dynamic at Stripe. I think one of the downsides of AI is it is an industry where people are tempted to just say things for retweets on Twitter and demo vaporware and things like that. But there's actually lots of very real, tangible utility happening. In Stripe's case, this is anywhere where you have performance of a system that's handling huge amounts of data. We have the biggest advance in computer science since the transistor, in the form of these models that are much better at handling very large amounts of data. It would be suspicious if all these new AI techniques and advantages and advances did not lead you to better performance in those parts of the business.
You mentioned this idea of real revenues coming into so many of these large language models and other AI companies. And it is very true. There are real revenues, no question. in the billions of dollars, but there are even more losses in that world. And I wonder, given how much of this business may be part of your payment system right now, whether that presents a risk to you. Meaning, when you look at DeepSeek or any of these other things where people start to question, whether this is all going to work, whether the economics of this long-term work, whether the scaling laws work, and whether the economic scaling laws work. What's your take?
Look, it's a highly competitive industry, and I think that's why it feels very exciting to be in tech at the moment, because you're getting all these advances and leapfrogging of models that's happening and everything like that. So it's for sure competitive, and I think if you bring any of the AI leaders on their show, I think they'll tell you that, and they'll have that look in their eyes. No one has, and it's good as consumers of this stuff. We should not want anyone to have a monopoly on that functionality. But you always get this dynamic in the early days of a new industry, where people rack up losses in the early days as they do the kind of core build out, and then it takes more time for the business and the profitability to mature. So I don't think that's an anti-AI argument. Again, I think you have to ask yourself the question: does this actually work, and does this provide value? I don't know about you. I'm deep researching up a storm these days. Like, I'm definitely generating compute bills for someone, and the value's there.